Good day everyone, my name is Marcus and we are here to help you navigate through this challenging global market and also help to guide your investment decisions. For those of you who are new to our channel, welcome. For those of you who are not, thank you for supporting us all this while. Now before we go into today's video, have a look at these disclaimers before we proceed. Okay, so for today's video, we'll be building on the topic of the previous video, which was 2020 in review. For those of you who have watched last week's video, again, thank you so much for supporting us. It was about the first 2 quarters of 2020, where we provided a brief summary of the major economic events that happened in those 2 quarters, as well as their impact on global stock markets. So for today, we'll cut straight to the chase and dive deep into the third quarter, where the major event that happened was how China and US relations intensified. This was especially important considering how the US elections were just round the corner and both countries have already been at loggerheads long before the elections. But relations seem to take an even more major downswing during this quarter. For example, on July 23rd, the US government suddenly ordered China to close its consulate in Houston within 72 hours. China retaliated by shutting down the US consulate in Chengdu. This caused major Chinese stocks listed on the New York Stock Exchange and the Nasdaq to tumble as many investors began worrying about delisting threats from the Securities and Exchange Commission in the US. Furthermore, in August, President Trump signed an executive order banning TikTok and ordering TikTok's parent company ByteDance to sell its US operations by November 12th. And at this point of making this video, the sale hasn't even been completed yet. For those of you who are not familiar with ByteDance, they are one of China's most valuable private companies with an estimated valuation of $100 billion. And this is huge considering how all this money was raised from venture capital, seed funding rounds, and not a single cent was even put in by public retail investors. Moving on, since July, Trump added nearly 100 Chinese companies into the blacklist and the entity list, in a sense banning their access to US technologies and capitals which they needed in downstream supply chains. Notable companies include the 5G equipment maker Huawei, the domestic chip maker SMIC, and the drone maker DJI. The US also passed a new audit law that may ultimately kick Chinese companies off American exchanges if regulators aren't allowed to review their financial audits. This directly led to the explosive secondary listing of US-listed Chinese companies on the Hang Seng Index in Hong Kong, involving JD.com, NetEase, and Yum China. One of the second major events of the third quarter was also how Ant Group, one of the most hotly anticipated IPOs of 2020, got cancelled at the last minute. For context, Ant Group is Alibaba's fintech arm and it filed for a USD 35 billion dual listing in Shanghai and Hong Kong. The IPO was oversubscribed for 872 times. The size of that is almost twice of UK's GDP. Nevertheless, the IPO was cancelled just 1 day before its debut after Alibaba's founder, Jack Ma, couldn't control his mouth and decided to criticize the Chinese Communist Party and their financial regulators for being too hard on startups in China. This led to Alibaba being investigated by local antitrust watchdogs, and at this point of making this video, it has lost almost 20% of its market cap. So much for a man who was dubbed the richest man in China. In September, Softbank was also reviewed as the Nasdaq whale, where it took large short positions in derivatives of tech stocks, which pushed the tech sector into a rally of all-time highs. Nevertheless, the trades ended badly. Softbank suffered a loss of $1.3 billion in quarter 3 of 2020. Yet, Softbank chief Masayoshi Son was adamant about the losses, and I quote him where he said that the loss is not even a dolphin, as the derivative position only accounts for less than 1% of Softbank's total asset position. Yet, after increasing pressure from Softbank's employees and investors who were fed up with the volatile gaming style of Masayoshi Son, Softbank decided to withdraw the trading strategy and return to betting on the long-term future of large tech companies such as the FANG. Now, moving on to the fourth quarter, we roughly saw positive news as stock markets continued rallying to all-time highs, and the world finally got a result after years of waiting when Joe Biden was confirmed as the next US president. He won several key swing states and obtained 306 electoral college votes in total. Yet, Trump has been trying very hard to box Biden into a hardline position towards China, where he clamped down on the blacklisting of Chinese military-related companies and sanctioned 14 Chinese officials. From an investment perspective, we believe that the Biden administration will move more towards alternative energy such as solar energy, as well as focusing on green infrastructure. We believe that stocks in this sector will benefit the most under the Biden administration. To top off the year, the vaccine was also finally ready before the year ended. The United Kingdom became the first Western country to approve the emergency usage of the vaccine. This was followed by the US, Singapore, and France. Nevertheless, in the past few weeks, new uncertainties emerged about a new strain of the coronavirus in Britain. As a result, the UK dived deep back down to its most serious tiers of isolation. The last piece of news in Q4 of 2020 was that after 4 years of negotiation, Boris Johnson finally concluded the Brexit deal with a 1,246-page trade document, which could be summarized into 3 important points. Firstly, there will be no tariff on goods, but companies would expect longer border clearance. Secondly, within the transition period of 5.5 years, starting around the time where we made this video, EU's current fishing quota in British waters will be cut by 25%. Lastly, Brits can stay a maximum of 90 days in the EU or a visa will be needed. With that concludes our 2-part series on 2020 in review. Our channel's investment on this year was that it has definitely been a volatile one, but we do expect that economic tailwinds will continue to remain strong heading into 2021. With regards to our specific stock picks for 2021, please stay tuned for our next video, as well as list any video ideas you have in the comment section below, because we will be happy to provide tutorials on any concept that you guys may be unfamiliar with. Do consider leaving a like because it really helps keep our channel going and supports our production efforts. Until the next video, please stay tuned and invest safe.
Ever since the day that you